What is up, guys? It's KOJOFOREX, aka GBP Emperor, aka Emperor of Blues. Today what I have for you guys is something different, basically the mathematical formula to making a million. So it could be a million cedis, it could be $1 million, $1 million naira. So it doesn't matter whatever currency you spend in your country, as far as you can literally follow this formula that I'm about to show you, you can actually end up making $1 million. So you might as well know that as a trader, nothing is really guaranteed. No matter how exceptional of a trader you have, no matter how much of a skill set you have, the market is never guaranteed, in the sense that today you could be up, the next day you will actually be down, and then so on and so forth, right? So it takes having an exceptional skills and an edge to be able to continuously and consistently grow and maintain a stable income in the market. That's why as prudent traders, what would do you best is to be able to know that skills of trading, trade the market, withdraw your capital, and put it in a stable, consistent, growing source of investment, right? Which is exactly what I'm about to show you guys today. So anybody that is trading the market obviously has one objective: to be successful financially. And then I basically, with my finance background, have studied various forms of investment on the financial market, be it stocks, be it bonds, be it treasuries, be it so many other variables that we're going to talk about, right? But in today's lesson, it's not really going to be about making that consistent income and then investing in the forex market or crypto market or anything, but our traditional investment, which has been around for so many decades now, which is a treasury investment. In fact, one of the most stable and successful investment scheme that is being provided in any sort of country that you may be living in. Now, the threshold here is that if you're from a Western country, you may not as much as possible relate to this formula that we're about to use. Why? Because when we talk about interest rates in most of these European countries, they are at its all-time lows, but interest rates in African countries and West African countries are usually within their mid-primes and then all-time highs, right? So if you're looking at some of these formulas that I'm about to show you guys, and then you live in a country like the US or Europe, UK, whatever it is, you would be looking at interest rates per annum of 1%, 1.5%. But here we're talking about interest rate of 16%, 14%, and so on and so forth, right? This is also something that we're going to use in attracting what we call foreign direct investment. So if you're somebody that comes from foreign country and then you're watching this video, and what I'm about to teach you seems even interesting to you, it will do you good to know that you can actually investigate and do your own research into investing in the Ghanaian economy or perhaps any sub-Saharan African economy, and then you'll be able to get better value for your money. It even goes a long way to cut across into explaining exactly why we have certain financial movement on the market in terms of certain countries' currency gaining enough strength than another one. It all has to do with interest rate differentials, right? Now, let me explain this to you. As far as I'm telling you that when you're investing in a country like Ghana, then you're getting a very better value in terms of interest rate of 16% or 16.5%. And then investing that same kind of money in the UK or US, and then you're getting 1% or 1.5%. What would you better want to do? You would rather want to transfer your funds and then invest it into the Ghanaian economy, right? The only difference is that you cannot invest your direct dollars into the country. All you now tend to do is that you want to look for cedis, right? So if you have, let's say, $500,000, then you're trying to look for equivalent of $500,000 in cedis before you can be able to then invest in the Ghanaian economy, right? Then you'll be able to attract that 16.5% interest. The only difference and drawdown here is that if you're investing in such of a manner, then you must understand that you are exposing yourself also to exchange rate differentials, because likelihood that the exchange rate at which you converted your $500,000 into cedis to be able to invest in our country's economy in terms of our treasury, when you have now succeeded in getting your proceed and then ended up trying to convert it back into your local currency, which is the dollars, then you may face, number one, interest rate changes, because maybe your interest rate as at that time where you converted into investing in the Ghanaian economy was standing at 6 Ghana cedis, but now exchange rate differentials, now you're going to have to exchange it at what, 7 or 7.4, which is now going to lower the dollar value of your investment return. So now if your investment return has not got a percentage which is in fact extremely higher than your initial investment that you decide to invest in the economy, then it goes at a loss against you. You must also be aware of tax differentials, right? So if you have to pay tax in the local economy as well as tax in your country itself, as far as you're making foreign profit from a different country, then it's all factors that you must consider. But amidst everything that I've talked about, now let's look at particularly those formula that I'm talking about that is going to basically allow you as a trader, as an investor, as a youth growing up to have that clear perspective of consistently making money and then growing wealth progressively as a youth, right? So we're going to use what we call the interest rate compounder or compound interest calculator, right? So what you must understand here is that, like you might have heard, you say what compound interest is, what, whether 8 or 7, one of them, right? But it was said by Albert Einstein, right? Compound interest is the 8th wonder of the world. Now, what it means is that if you're taking advantage of a system scheme like a compound interest, then what it means is that, let's say I start investing with, let's say, $10,000, right? And then that is my base capital. So $10,000, and I'm saying that every month I can be able to add up to my investment of, let's say, $500 every month, right? So $500 for January, $500 for February, $500 for March, and so on and so forth, all through to the year end, right? So at the end of the year, I would have made a progressive cumulative savings, and then those cumulative savings is going to attract an interest on its own. But now, when I do not withdraw that interest and I'm carrying it forward to the next year, then now the interest that I'm going to be getting, aside the gradual savings that I'm going to be doing on my investment, is that I'm going to attract interest on the initial interest I made from the previous year, which is basically what compound interest explains. So making interest on interest is what we call compound interest, right? So like the name suggests, compound. So you have simple interest, which is basically like making money on your base capital, and then you withdraw it. That's the end of the process. You cannot carry it forward. But for a compound interest, you're going to make money on your capital, you compound that capital with your initial interest, and then you reinvest it and then make extra. So if you're carrying this forward for 1 year, 2 years, 3 years, 5 years, 10 years, 15 years, 20 years, then it becomes extremely crazy, in the sense that there's going to be points in time where your money is actually going to be very, very small with respect to like the actual investment sum, your premium that you're gradually saving. Now your interest is going to end up being even more than your initial investment, and then your bigger interest is now going to even attract extra returns. Then it's going to even blow the whole thing up, right? So this, what you're seeing here, is my Excel sheet that I use in calculating compound interest. You can tweak and change the variables as and when it suits you, depending on your financial circumstance or conditions, and then you can be able to find a very, very definite financial formula in planning your life. Whether you want to buy a new car, whether you want to buy a house, whether you're trying to save for your own pensions, your kids' educational plan, you can literally use this compound interest calculator that I have here to basically, find that formula for your own success, right? Now, you must also understand that success generally is a very subjective thing, right? Now, I find success in things that allow me to be able to have the freedom that I have, which is what I'm enjoying today. So as far as I can be able to plan my life financially and have a financial plan that allows me to do the comfortable things that I like to do in my home, and then still be able to fend for myself and family, and then support the people that mean so much to me, that is what I call success. So success is not necessarily being able to make that $20 million, 30 billion, and so on and so forth. Success is being able to find. So you can basically define your own success for yourself, like I've already said initially, right? So with me, then I can tweak around these basically depending on whatever conditions in life I want to achieve. So let's say I want to buy a new house, then I come here. I want to buy a new car, I come here. I want to save money for traveling, save money for holidays, I want to basically do anything, I come here. So I'm going to now straightforward break down these variables for you, and then you can also be able to follow it if you so wish to be able to plan your life financially. Now, if you want to gain access to this spreadsheet, then you want to click in the link in the description to join the KOJOFOREX Telegram community, because I'm going to actually drop this Excel sheet in the community, and then once you click it, you can have access to it. Also follow me on all social media at KOJOFOREX KOJOFOREX, especially on Instagram, because I've also been teaching financial education for free on my Instagram live sessions, and you want to take advantage of that. Yeah guys, so currently if you're looking here, you can see that with a compound interest calculator, we have what we call the principal amount, right? So the principal basically is what you are starting with, right? So principal amount, like we will define as what you are starting. Then we have what annual interest rate. So annual interest rate will depend on which country you live in. So like I said, in Ghana, our annual interest rate for a treasury bill stands around between 14% and 16%, depending on the type of interest, the type of treasury you're looking at. If you're looking at 6 months, 3 months, or per annum, right? We also have bond rates, fixed bond rates, which is like the 3-year bond rate. That is actually also provided by the government, and then it stands at a fixed rate of 20%. So we can perhaps do our investment portfolio in terms of assessing what will better stand for us, whether we're looking at a 3-year fixed bond rate of 20%, or we're looking at a 3-month treasury bill rate of 14%, or a 6-month, perhaps even a 1-year one, right? So all the interest rates, you have to Google it, right? If you don't know the interest rate in your country, just Google it. Okay, current interest rate for treasury in Ghana, current interest rate for treasury in Nigeria, in South Africa, in UK, whatever it is, you're going to get that. Now, second is you want to look at the term of years you're planning to do this. Is it 1 year? Is it 2 years? Is it 5 years, 10 years, 20 years, whatever it is? Then you determine that. Then you also can tweak the start date, right? So here you can change it. The moment you change it, it takes effect in the whole Excel sheet, right? Then you want to also check the compounding frequency. So sometimes investment portfolios also, or investment schemes also, allow frequency of compounding, in the sense that would the interest be charged per month, would the interest be charged per annum, per semi-annual, and so on and so forth, right? But I believe that with this example that we're given, the interest frequency will be per annum, which is like a 1 year. So the Excel sheet will automatically break it down on a monthly interest basis, right? But we are looking at the annual interest rate basis. Then the payments comes down to how much of the money can you be contributing every month. So if you're a salaried worker, you're receiving, let's say, 5,000 Ghana cedis, you're receiving 10,000 naira, 100,000 naira, whatever it is, you're receiving even 50,000 pounds or 10,000 pounds, right? Or even $1,000, whatever your currency of interest is, you want to look into your own self and be like, okay, if I receive this salary, or if I trade this market on a monthly basis, on a weekly basis, and I'm making this consistent gain, then I can be able to set aside so and so percent towards my investment, right? So once you do that, then we'll also come down to what frequency of payment. The frequency of payment has to do with, are you going to be doing that frequency of contribution to that principal amount on a weekly basis, on a monthly basis, on an annual basis, or a yearly basis, right? Whatever it is, it has everything to do with your personal interest. But let's take a typical example here. So using my own conditions. So let's say everything we're doing here, we're doing it currently in Ghana cedis. It could be in dollars, whatever suits your interest, because the numbers does not change. We have no currency attached to this, right? So with the Excel sheet, it's just the numbers. So as far as the numbers make sense to you, then let's get ahead with it. Let's say I'm starting my initial investment with 100,000 Ghana cedis. Now with 100,000, I'm putting into treasuries and I'm expecting to attract interest of 16%, right? 16.5% per annum, right? And then the growth rate in terms of how many years I'm willing to go ahead with this. I'm willing to go ahead with this investment for 5 years, right? So start date, let's say I'm starting from 2022, right? And then I'm actually going to start from May, right? So I think May is 5, May 5th, 2022. So May 5th, 2022 for 5 years, and then compounding frequency, like I said, annually, right? You can tweak that here. Everything is already done in the Excel sheet. Now payment means that how much am I going to on a monthly basis contribute after my initial investment. So let's say every month I'm willing to continue this with, let's say, 5,000 Ghana cedis extra contribution, right? Because maybe I can afford to put in 5,000 every month towards the same thing that I have here. Payment frequency, so that is monthly basis, right? So I'm going to do a monthly contribution of 5,000 Ghana cedis for 12 months, right? Now then this is exactly the result we have, right? So here then you tend to see that what the future value of my 100,000 investment and consistent contribution of 5,000 Ghana cedis for 5 years, then this is the whole sum we have here. So we have total payment. The total payment has to do with my interest. My total payment has to do with my principal amount plus the monthly contribution for 5 years. Then it's going to be what? 300,000. So we have total payment. Total payment here basically refer to the amount, the frequency of payment that I've been making over the period, right? So all the 5,000 contributions that I've been doing, is it. Then the total payment plus the principal, which is the 100,000 that I began with, then we have it sitting at 400,000 Ghana cedis. Then this whole sum, the interest that it has accumulated over the 5 years period, is 261,000 Ghana cedis, making my future value of this investment scheme 661,000. So if it is a house I want to buy, if it's a property I want to invest in, whatever it is, then it means that this is the sum of money I'm expecting to make at the end of that 5 years to be able to churn it towards that investment purpose, right? So you can tweak this again. Let's say maybe this variables is too much of a huge number for you, thinking, Kojo, how am I going to even get 100,000 to start with? But remember that in this video I said we were looking at a way to make 1 million, be it 1 million cedis, dollars, whatever it is, right? So here we can now tweak our investment payment, which is a 5,000, to let's say 6,000, and let's see how much of a difference this makes. So it brings our future value to 51,000. We're looking at consistently what is going to make us get, let's say, that 1 million in 5 years, right? So let's tweak this to, let's say, even 8,000 Ghana cedis, and that brings us to 930. Then finally, I think that when we make it 9,000, then we have 1 million. So basically what this simply means that if you want to make 1 million cedis, $1 million, 1 million naira, whatever it is, in 5 years, then all it means is that put aside 100,000 into the treasury or an investment scheme that allows you to attract an interest of 16.5%. Make sure that from the very day you start that investing, every month thereon consistently you're going to deposit 9,000 towards that investment, and then with compound interest at the end of 5 years you're expecting to make $1 million of that particular currency in which you're investing, which is exactly what we can see here. But then again, I said, if you do not have that access to that kind of capital or money at the moment, then you can tweak this to suit your current circumstance or current standard of living. So let's say somebody may prefer to say, okay, Kojo, what if I'm starting with 1,000 Ghana cedi or $1,000 or 1,000, and then every month I can contribute $200 or 200 cedis, whatever it is, right? So 200, and then we're looking at still attracting the interest rate of 16.5% for 5 years. And let's see what we have here. You're going to actually make 20,000 cedis. Now look at how it gets crazy. If you continue this consistently for the next 10 years, then it's going to attract 60,000, and then imagine continuing for 15 years, then it gets even crazy. So a mere 1,000 Ghana cedis and then a consistent monthly contribution of 200 Ghana cedis for 15 years, then you're going to make 148,000 Ghana cedis, whether it's dollars, naira, whatever it is. It makes much sense to you yourself depending on this, right? Take it to 20 years, then it even gets insane. Then we have 336,000, right? So if you just put 1,000 cedis and then you're going to make a consistent monthly investment of 200, and you're able to keep this up for 20 years, then this is the insane amount of money you're going to make. Now let's excite ourselves with the previous example I was doing, which is like that, 100,000 towards the principal and then a monthly contribution of 9,000, attracting the same interest of 16.5 for 20 years. Let's see, then that is, we're talking about 16,321. So this is one of the major formulas that major investors and major wealthy people, billionaires and millionaires across the globe, using compounding and gradually increasing their wealth and net worth. Number one of this person is Warren Buffett. He literally is a master of compound interest and reinvests always his interest in the market or in his investment schemes, and then continuously make insane amount of profit. So you want to take advantage of this knowledge and then use it to guide your own life and then plan your life accordingly so that you can be able to, have a financial success. We're gradually going to be preaching not only technical analysis and teaching you how to make money on the market, but also how to consistently plan your life financially and then become a success in the next 1 year, 5 years, 10 years, and so on. So if you love this video and you want me to continue with this kind of series, make sure to smash the like button, subscribe to this channel. Let's head towards that 100k subscriber mark, and also make sure to leave a comment if you don't understand anything. I'm definitely going to make sure I address it. Follow me on all social media at KOJOFOREX, KOJOFOREX, especially on Instagram. Don't follow me on Facebook, and then don't leave any message to me on Facebook because usually have a lot of scam artists there and I'm not active on Facebook at all. Also make sure to link up with me on Twitter. I'm very much active on Twitter these days. I'll be organizing Twitter spaces so that we have a lot of interaction and discussion among us. Click in the link in the description to join the KOJOFOREX family so that you can be able to take advantage of every information that I put out in the community. And then 7th of May, we're actually holding an event. 7th of May, we're having what we call the KOJOFOREX business lunch. So this is a business lunch that I'm basically organizing upon myself with some few sponsorship to be able to teach you how to take advantage of both what we call the active income and passive income. So as a human being, what we are doing here, it could be maybe you making an active income from continuously working, and then you can use your payment on a monthly basis from your passive income. Passive income is something that you do not even have to sweat blood to make those incomes. So I'm going to be teaching you guys how to attract passive income from various sources, especially towards the same industry that we work in, which is the forex market. So you want to take advantage of that. It's a free program. I'm going to leave access to registration here, and then that program is happening in Accra, Ghana, Fiesta Royal Hotel. If you're from Ghana, you might as well definitely know where Fiesta Royal is. So take advantage of that. Yeah. So without wasting my time, I hope you guys got so much value from this video, and I'll see you guys in the next one. Peace.